Coming up on today's episode, what are some of the biggest mistakes buyers make before applying to a home loan? Like, where are they going wrong?
Yeah, sure. So most of these mistakes are completely avoidable, provided they have a knowledge of how lenders look at your application.
Right.
A lot of people do apply with multiple lenders.
Oh, yeah, because that hurts you.
That can kill the deal because it's going to come on your credit report.
Right.
And the credit score goes straight down, which affects the borrowing majorly.
Yeah. Dodgy advice and bad decisions can cost you big in real estate. We're here to make sure that doesn't happen. Welcome to the No BS Real Estate Podcast. I'm your host, Jo Agresta, and it's time to take control of your property journey together.
Hi everyone, this is Ankita Bajaj from Finserv Solutions. I'm here today at No BS Real Estate Podcast. I'm going to talk to you guys about some of the concepts for mortgage, for loans, LMI, fixed interest versus variable interest. When is a good time to buy? Thank you. Let's tune in and see how we go about it.
Welcome back, everyone, to the No BS Real Estate Podcast, your listening how-to guide to the Aussie finance and real estate market. I'm your host, Jo Agresta. Today, I'm joined by Ankita, a mortgage broker helping buyers make sense of one of the most stressful parts of the buying property process, the finance. And this is such an important conversation because a lot of buyers are trying to work out whether they should wait until they have a 20% deposit, pay LMI and buy sooner. Like, these are the two options they're weighing up. They either think they need to fix their rate, stay variable, or just figure out what are the banks actually looking for and what's going to work out best for them. So today we're going to unpack three big mistakes or, challenges that buyers often face or misunderstand, which is LMI, which is lender's mortgage insurance for those that don't know, home loan mistakes, and fixed versus variable rates. And to unpack that, I have the wonderful Ankita with me. Ankita, welcome to the show.
Oh, thank you, Jo. It was lovely meeting you guys, and I'm so glad to be on the show right now.
Oh, me too. What I got from you was just a lot of warmth and a lot of encouragement. And I thought it's really nice to hear from brokers who have that empathy and that kind of tone and approach with their clients, because it is such a stressful and big process.
It is right now, trust me.
I was going to say, first thing I wanted to ask was, how has it been in the market, with your clients? Do you have a lot of buyers that are still trying to get in?
Well, the market has been playing up a lot. Market has been uncertain, but it has been always also very interesting.
Yeah.
So, yes, it is right now a funny market, but at the same time, I won't say that buyers have stopped. Yeah. So the real buyers are still out there. They still want to get into the market. They still want to take advantage of this time. And that is where I would say that is what they're doing is right.
Yeah.
Because take the advantage of the lower market, this funny market.
I think that's the one thing that, the media kind of always puts out those scary headlines. And then this is where buyers, like you said, maybe the ones that were hesitant, they're cooling off. But the ones that are really wanting to buy, it's still quite active. Yeah. There's not a broker or advocate I've spoken to that has said, oh, there's no buyers, it's very bad. Yeah. Everyone said, I'm very busy. Yeah. It hasn't changed.
That's right. And it is right. Just this afternoon, I was talking to an agent and they checked on me to ask how I am feeling about the market right now. And I'm like, I'm busy. I'm so flat out.
Yeah.
And he's like, wow, how is that happening? Because the first home buyers are still coming in.
Yeah.
That's where they're doing the right thing.
Yeah.
Because they're getting into the market at the right time.
Correct. And I think the longer you wait for things to happen, I always say, we don't have a crystal ball, so what are you waiting for? If the timing suits your budget, your personal circumstances, and you can do it, and a broker has said, hey, it's financially possible, don't let all the noise stop you from getting into taking advantage of this market at the moment. Like you said, it's a weird time, but it's working for a lot of people.
Yes, it is. Definitely.
Well, I think, Ankita, I wanted to go into your background, tell us, I guess, how you came to the finance side, what your business does, and, what you do with the clients, who is it that you normally work with?
Yeah, sure. So I always wanted to get into the finance industry. I've done my bachelor's in commerce, my master's, and that's where I thought that I know where I have to go.
Yeah.
There was a bit of a career change at the time,
Yeah.
but then I thought, no, better stick to what you want to do. And that's where it's got me. So I've
Wow.
been in this industry for the last, I would say, 17 years now.
Oh my God.
Yeah.
We have a powerhouse of knowledge right here.
Yeah.
We need an open Q&A.
Sure. But I've been running this business of mine, Finserv Solutions, since past 10 years as a mortgage broker.
Wow.
And yes, I've been helping my clients since then to get into their homes, their investment journey, and getting themselves sorted in a broader spectrum.
Of course.
I've been helping a lot of first home buyers, getting the right knowledge, the investment market, getting people to build their property portfolio.
That's amazing. It would be so rewarding to see, like, you must have a lot of those first-time buyer clients, like being in the industry for so long, that have now come back and done investment journeys with you.
Absolutely. And I love that part.
Yeah.
Because I have my clients, I think they have a lot of trust in me.
Of course.
And that's why they stay back.
Yeah.
They have been staying back for the last 10 years. Surprising enough, but I still have my first client with me.
Oh, yes.
And they still don't buy anything without discussions, without going the pros and the cons. So I'm glad that I have developed that trust, that built that confidence in them by obviously, telling them the right thing.
Yeah, and just helping them on that journey, because I often refer to mortgage brokers as what do I call them? Property psychologists, right? Because you're dealing with the customer at that very early stage. And as we know with a lot of maybe the first-time buyers, they tend to make that mental decision to buy. And then the first thing they do is go on realestate.com and look up all the properties that they can't afford.
Yes.
And then a mortgage broker is the one to bring them back down to reality. But then what you're doing is you work with them so much on advising, oh gosh, okay, yes, you can make an offer. Yes, this is your limit. And you're getting those calls at the 11th hour on a Saturday.
Yes.
And I feel like you guys do so much servicing, and that's why that it makes sense to me, that you've got your very first client still with you.
Yes, and that is the motto for us as a team, that we have to look after our clients.
Yeah.
It's just not selling one loan. We build relationships with our client. We know them personally. We get involved in a lot of other things rather than just being on that loan, rather than just being called a mortgage broker. It's all about building that relationship, and they have gained a lot by that. I think they can call me at 11 p.m. on a weekday night. Tell me, Ankita, what should I do? And I'm like, here you go.
It's like, here you go. Don't worry about it. It's fine.
Yeah.
And I think having that voice of reassurance is huge for clients.
Yes.
Thank you so much for sharing that. And it's wonderful to hear how much experience we have on the show today. So I know the topic we're going to break down is bread and butter. So this will be great for our listeners. Before we get started, though, I do have a statement. Now, this is what we do on our shows. We call out a statement for the day, and then by the end, we'll have you decide whether that is bullshit or not bullshit.
Right.
So we see if we can hold up our brand name. So today's statement is a 20% deposit is not always the smartest move. Sometimes waiting can cost you more than LMI. Now, we won't answer it yet. We'll come back at the end. I'll remind you.
Okay.
But let's go through the conversation and see, well, what's the result?
Yeah.
So I guess first things first, I think we need to start with where buyers are confused, right? So when buyers first come to you, what are they usually most confused or nervous about when it comes to lending?
Yeah, sure. Most buyers are definitely very nervous about very predictable things, how much they can afford, where should they buy, what are the interest rates going to be, will I be able to afford this mortgage, and what should I put my structure as?
Yes.
So these are the very common things, clients come back to us, and that's where we give them the whole picture of calming them down, first of all, knowing their situations and to understand, and then guiding them where they are sitting at and how should we proceed from there.
Yeah, and I think that's the hardest part, that confusion is you got to do a lot of navigating and question asking to them to
Yes.
try and get to that bottom of like, what are the goals?
Yeah, exactly. Because they would have the deposit,
Mm,
but do they have enough?
yeah,
Are they prepared for those upfront costs? Or have they even thought about those costs? Are
yeah.
they aware of different schemes going right now? So all those things matter a lot.
And you would be guiding them, I guess, like every scenario for you would be different. Like every client has totally different, borrowing, lending and spending and saving habits, right?
Yeah, and that's the fun part of being the mortgage broker. It's not a straight stagnant job. It's just very interesting because every client comes in with a different background, with a different financial condition,
Hmm.
different situations. So yeah, it's interesting.
I can imagine. And what also I think is, I always encourage people when they're talking to a broker, like some people I've spoken to, like customers in the past, like I'm an ex advocate and real estate agent,
Oh, nice.
and they'd be so embarrassed by their spending habits and they stop wanting to go for finance. And I said, listen, the only person you're going to be able to help you fix that problem is probably a broker or
Yeah.
a financial planner. Now, if you can't afford the financial planner because your spending's bad and you want to buy a house, broker's probably a better place to start.
Yeah.
So,
And that's what we always tell our clients. If you are ready to buy, please come to talk to us
yeah.
because you are thinking very different to what it is actually out there.
Because like the lenders have different policies, different criteria, and there's always like a very niche lender that will lend the money at the end of the day.
Yes.
And then the broker, your job is like to make that happen. It's like make
Yeah.
that marriage work.
Absolutely. And that's where I feel that all the more reason for them to come to us. Because if you go to the bank, they will just limit their policies to you.
Yeah,
They'll
that's right.
put out their applications and, you will have n number of applications, but still no resolution. So it's better while we work with around, 50 to 55, 60 lenders, why don't you come to us and we can get that all resolved?
Yeah.
Yeah.
You need to have those options on the table, right?
Yeah.
And I guess, do most buyers, in your opinion, understand what they can actually afford when they come to you, or are they usually surprised once their borrowing capacity is properly assessed?
Yeah, and that's a good question. Well, most of the buyers do get surprised because, for obvious reasons, they don't know how their incomes or how their expenses are being assessed. Most of them go on assumptions based on online calculators or what their friends and family have gone or what the other person or banker has suggested. But then when we do calculate their actual incomes, for example, their bonus payments
yes.
or their commissions or their other debts, which they had not even thought about. For example, the afterpays.
Oh, afterpay. I got caught out with that.
Oh, really?
Yeah, I did.
It's a very common one, so you're not the only one. These all get put in together and then presented to the bank, and that's where they get surprised that, it's much lower or much different, I would say, to what they had thought.
And I think this is where those online calculators can be powerful for an indicator, but I find them very inaccurate. Like in comparison to when, yes, I could have given the calculator exactly what I've given, the broker, but it always turns out different. In the end, like that's what I found in the early days when I used to do them, and whenever I've tried to borrow, I'm like, can't trust it. I just have to talk to someone.
Yeah, but in saying that, Joe, it's just not always getting the lower amount. Some of our clients have been pretty surprised that they can also borrow that amount while they had always been thinking,
They can't.
They can't. So they are happy to know that maybe because they haven't gotten the incomes right or they were basing it on the wrong terms, while there were other lenders out there who actually could alter the policies. So,
It's hard, right? Because like there's so much assumptions I think that buyers do. And to those of you listening today who go, yeah, I don't think I can borrow. I always say it's not going to hurt to have that conversation. It's like, I think if you start, at least you get a starting point. Like maybe you'll be surprised that you can borrow and you can borrow more than you thought, or maybe you're going to get an answer where you might have to spend some time saving.
Yes, absolutely.
And it's never a bad outcome either way. It's just a direction.
Right. That's right.
And I think, what are some of those things that buyers think matter most to the bank? Because I feel like buyers will always come in with like an assumption versus what lenders actually care about. So I feel like there's what buyers care about and then what the lender cares about.
Yeah.
How different are they?
Very different.
Right. So
very different. Trust me. So many buyers who come to us, they feel that banks mainly care about one thing, that is their salary.
Oh, interesting.
Yeah. Yes, salary is the major component, but there are other things involved as well. Like, for example, their stability of income, their consistency, how long they have been in the roles, their spending habits, their expenses, their current debts or liabilities, how well have their repayment history has been. How well have they been saving to get into their house? So all these things matter a lot. So banks do look into this pattern of a client as well.
Yeah.
Before they just lend it out.
Of course. So, and these things all have a different weighting to them too. Like they need to, there's probably, a higher percentage on the salary. But if you've maybe, let's say you've got, I hear this a lot, people have a salary and like, I'm getting paid like $200,000 now, but you've had the job for 1 month.
Yes.
It's like, that's not the same thing. Yes, you've got that good salary now, but that's not necessarily going to help you immediately.
Absolutely. Like, for example, Sydney is predominantly famous for their IT contractors, right? A lot of people feel, oh, I've got this job and that's it. I can now go and buy the house because now I have an income of around $280,000 by doing like maybe $950 a day or $1,000 a day. Don't quote me on numbers. But all right, contracting is amazing and it fetches you good money. At the same time, banks would want to know how long have you been contracting for?
Yeah.
How many months have you been contracting for? There are policies which says that you need to be a contractor for at least 6 months.
Wow.
And that's where the sustainability banks check on. That yes, you do have that income, amazing. But at the same time, we still can't lend you.
No, and I feel like this is where those really niche lender relationships that do that specialized kind of like solo entrepreneurs or like, sole traders have to have a difficult time with their lending sometimes, depending on policies.
That's right. Absolutely right. There, like, as we say, there is a solution to everything.
Yeah. But there's a lender for everything.
Yeah, there's a lender for everything and there is a strategy for everything.
Yeah.
It's just how ready we are.
Correct. And that's what I love about this whole journey is like you're getting someone who's really guiding that, that decision and that journey for you. So it's never a full no. It's no, well, it's a no for this minute, but let's do these things to make it happen. Or actually, you're ready now. How surprised? Do you get a lot of people that get surprised when you tell them they're ready?
Yes, a lot. They are like, oh, are you sure? But my bank only told me this one. And I'm like, oh, all right, that's why you need to come to me.
Yeah. It's like, the bank's lying.
Yeah.
But it's like, that's one policy.
Yeah.
And that's where that power of working with a broker is you do have multiple access points to different types of lending criteria and different policies. Whereas when you tend to go to your bank, you'll get whatever their policy allows you to do. If they're not someone who's friendly to sole traders or to company lending, then your very specific bank that you've used for 15 years probably doesn't want to lend to you.
Yeah. And trust me, I've had instances where I told them that, yes, it can be done. And they have settled in the property in the next 6 to 8 weeks.
Wow. That's awesome.
Yeah. And how assuring is this fact that you can get that happen for clients?
Yeah.
And that's where clients have felt very confident and
of course.
And I feel good for them as well because they've started their journey. That means they've got into it.
Well, it's like it's always that door opening for financial freedom, right?
Absolutely.
Like once you're in the door and you have that first asset, it gives you options in future. You never have to save that deposit again, as long as you've got into the market with an asset.
Yeah, and within a year, they are ready to buy their second one.
Yeah, which is so cool.
Yeah.
And that would be cool for you to see too, because you would be able to review their files and kind of say, hey, the property went up in value.
Yeah.
Have you thought about any other options? Is that something that you sometimes do?
Yeah, that's what I'm saying, that with us, we are fully connected with our clients.
Yeah.
We contact them regularly just to make sure that they are on the right track. If they are missing out on anything, is there something we can do for them? And that's where that conversation comes in as well, where we focus whether, they have any plans for future investments, which is a good plan for future. Like being in the industry, I would want my clients to get into their property portfolio,
Yeah, 100%.
Why not? That's the easy money.
That's the fun money. And it gets addictive. I feel like once you buy your first house, it starts to have a domino effect.
Plus, it gives them the confidence that they have made the right decision.
Yeah.
When they see that equity in their houses, they feel that, it's another kind of a feeling for them. I've realized that with a lot of my clients, that happiness which brings this along.
That's amazing. And it would be so rewarding for you to see that, with the clients that you can remember where they started and you're like, oh, look how far you've come now.
Yes, absolutely.
And this brings us to today's topic, right? Because I loved when we were talking on the phone, you said there was an opportunity to talk about the LMI, right? So lender's mortgage insurance. So should you pay it or should you save 20%? And I want to start, really simply. Let's just break it down for everyone. What is LMI and who does it actually protect?
Okay, sure. So, good question. Actually, a lot of people do get confused around that side of things. So, LMI, it's an insurance that protects the lender, not you.
I think that's where a lot of people get that misunderstanding.
Yes. So it does protect the lender if you default on your loan and the property sale doesn't cover the outstanding debt.
Right.
Yeah. So if I give you an example, on an 800,000 property, with a 10% deposit, you're looking at roughly 15 to 18,000 LMI.
Yep.
Which is around 2%. Right?
Okay. Yep.
But at 5% deposit, they can push it closer to 25,000 to 30,000.
Ooh.
Yeah.
Okay. So basically that deposit shifts.
Yes, definitely. So lower the deposit, your LMI is going to be higher.
Yeah. Okay.
But every scenario is different. But the common misconception is that people think it protects them.
Oh, that's funny.
Yeah. It doesn't. So if you default, the insurer pays the lender.
Yeah, so it's basically protecting the lender if you can't hold up your end of the deal.
That's right.
Got it. And I think this is where these two options, this is why this conversation's important, because people ask, right?
Yes.
Like, why do buyers get so scared of LMI? And do you think that fear is always justified?
A lot of people do get scared of LMI. It is a scary word, scary term. However, if you think in a broader spectrum, how long will it take for you to save that 20% to not have the LMI?
Yeah.
It does take very long.
It's a long time in this market where the average for a lot of houses, especially in New South Wales, is sitting at like $1 million. 20% is huge.
That's right. So I understand that 15 to 20,000 scares them. But at the same time, you save the time to enter the market.
Yeah.
Isn't it? Save that extra 10% depending the deposit to be used for further investment or anything else.
Yeah, I totally get that.
Yeah.
And I hear that.
So the fear is justified if you're stretching yourself out to the limit. However, if it's letting you get into the market by that little LMI, because if you compare a property price to that LMI amount, that's very little.
So this fear that they have of LMI, like I'm not paying that insurance, it's a scam. It's like, well, hang on, it could activate. It's the question is like, is it going to help me get into the market sooner and just pay the LMI?
Yeah.
Or am I going to sit on the market saving this 20% deposit for another year?
Exactly.
And now the property prices are completely different once again.
Yeah. And I was going to cover on that side as well. So you are saving yourself that 15 to 20K today.
Yeah.
However, you are going to pay 80 to 90K next year.
And that's
until you save that money.
That's a huge perspective.
Yes, absolutely. I mean, to be honest, I bought my first property with LMI.
Oh, yeah, so did I.
And I have grown since, I've got my own property portfolio. And that's why, based on my personal experience, I would suggest that to my clients as well, because property is always going to give you back your money.
It's sitting somewhere, and it just means that the strategy might be to hold it longer. Like if you can, and you're not, obviously, we're talking in those scenarios where you're in a position to keep that property going for a long period.
Absolutely.
But the strategy might have been to get rid of it in 2 years. The market's taken a turn. Okay, now you're holding it for a bit longer.
Yeah.
And it allows you to kind of move differently. So it's an asset. Once you're in, you're in. So,
and also to the fact that when you buy a property for yourself, you are going to live in that property for at least 4 to 5 years.
Yeah.
And that there is what you're covering yourself for, your LMI, for the property growth, for all the ups and downs going in the market, because they don't go for any longer than a year or a year and a half, right?
Yes.
And you come back in the market with even much stronger property price.
Yeah.
So consider all those factors and don't stop yourself, I would suggest. Because,
LMI.
Yeah.
And I think that's exactly what I wanted to break down, that fear today, right? Because you've kind of explained like those situations where LMI could actually work really well or make sense for the buyer. When would you say to someone, no, I probably would wait and save a bigger deposit? Is there ever that scenario that you come across?
Yeah, there have been times when we have told our clients that now is not the right time to buy.
Right.
Because obviously when there is not a stable or a strong income, you still have got a lot of time to save at least that amount, which can let you in.
Yeah.
Your expenses are much higher. So we always suggest them to work out some sort of budgeting for yourself. When you have a deposit of 10 to 15% and the numbers genuinely stack up, the sweet spot is around 10 to 15%
Of
is
course.
what we expect or suggest the clients to do until. But if they are not able to, because of anything.
There's so many factors.
Yeah. That's where we suggest that it's better to hold off for some time, revisit your numbers, work out on some sort of saving strategy, and then see if you're ready to get into the market or not.
I think that, and it makes sense when, I always encourage people like to say go to a broker. It's because there's so much assessing and like tips and like budgeting ideas that you do get from it. So when you're advising clients, I'd imagine you're like, listen, you have like $1,000 a month on subscriptions. Do you need every single subscription?
Absolutely. We have that conversation almost every day.
I can imagine, because with streaming services, Netflix, all of these subscriptions add up.
Absolutely.
And we review them in my house. My partner and I always go through our spending.
Yeah.
She goes, we don't need that subscription. And she's the budget manager. And I'm like, oh, but what if? She goes, but you're not watching it. And I'm like, damn it. I can't argue. Yeah. I'm the spender. She's the saver.
Oh, wow.
So, but it's balance. It's balance.
Has to be, right?
Has to be. Someone has to control me.
Yes.
Otherwise, I would have.
You've got the right person.
Correct. I've got the budget manager and it's fine.
Yeah. You definitely don't need Ankita for that. I can be hard.
You can be hard. Yeah, she's tough. But when it comes to lending, I know that when it's good to have her in the room because she just supports the broker. It just becomes a roasting session of my bad habits.
Yeah. And we've had so many instances. And now the clients are very happy to the decision they made. To be honest, there has been instances where we have asked the clients not to have that regular daily coffee. You start your day with, I'm sorry.
I had a big habit in COVID.
Yeah.
I was living at my parents' house. We were waiting for our house to be built. We were getting coffees every day delivered. It was bad. It was so bad. And when I look at the bank account back then, I was just so reckless. It's like I can't imagine now doing that at all.
Everything adds up. Yeah.
Oh, all of it.
We've had detailed conversations with the clients that you guys can save only if you need, if you get regular or a keen discussion on it.
Yeah.
Or a direction.
It's like it's got to have some meaning behind the spend. It's like it can't just be pointless.
Yeah.
Like, why do you buy 16 coffees a week?
Yeah.
Do you need to buy 2 coffees, 3 coffees a day?
Yeah, and that's when they realize that, yes, this is all what they can control in, and that's where they can put their money towards in a mortgage,
and have their money work for them.
Yes.
Like, and this isn't about those listening today, this isn't about controlling your spending and saying, oh, you're not allowed to have fun, you have to eat ramen noodles every night. The whole point is when you're grinding for a goal and where that money can do something and work for you, that's where assets like property is a wonderful thing. So if there's short-term sacrifice to just get into the market, then you can return to some of your habits. It's just when you're about to lend and do borrowing again, those factors are all going to come back up again.
Yeah.
We're going to ask about, why are you getting smashed avocado toast every day?
Absolutely. Joe, you're so ready
Yeah.
for your next one.
Yeah, I think so. I think we need to have a conversation after this. I have to talk about it. And I guess what should buyers compare before deciding whether they pay LMI or wait? Like, is that things like rent, market movement, income stability, deposit size, borrowing capacity? Like, what are those factors that they need to compare before they make that decision?
Definitely. Very good question again. The flat market scenario is the honest check on the whole argument. So when growth is 0%, the case for rushing weakens considerably. So LMI as a strategy is explicitly tied to an opportunity cost that only exists when prices are moving.
Yeah, right.
Current deposit is another factor. Yeah. Monthly saving capacity. Monthly rent. So the rent paid while waiting is the most underappreciated number in this whole conversation.
Wow.
Yeah.
So talk to me about that. So like rent being underappreciated.
So a lot of people at one point think that rent is the only thing which they can, if they can put their money towards rent, they can definitely put their money towards their mortgage repayment as well.
Yes, it's seen positive.
Yeah. So yes, rent is there. It's a little bit more for sure, but also remember it's going towards your own asset.
That's right. It's painting that picture to the bank that you can be responsible for a home.
Absolutely. And that's why there are certain lenders who actually check the bank statements to see their rental history.
Yeah, right.
Yeah, a lot of people don't know, but rental history can also count towards your genuine savings.
Oh, yeah, it can too. That's right.
Yeah. So if you have put in money towards rent, that can be considered as your savings.
Oh, see, that's a huge factor that I think we're going to have to highlight very broadly when we, show this episode on socials, is rental history contributing to that.
Absolutely.
Because that's not widely, I think, recognized until someone's had that chat with a mortgage broker.
Yes, and that is true, because banks do believe then that you can very well do that saving and save and make your repayments towards your house as well.
Yeah, that's huge. And I think that's just a bit of a relief for those renting who think it's a negative or a detractor for a bank. It's like, well, no, it's proving that you can manage a potential mortgage of that size. And with the way the rental market's been, you are paying a full mortgage in some cases.
Yes, absolutely.
Like in the past, it was different. In this market, you are basically a mortgage payer. So
yeah, true. And thanks to the government who have been coming up with such good schemes as well.
Yeah, that's
so why
true.
not take advantage of that 5% deposit scheme again? And that 5% can some banks consider as that rental payments, which you have made towards your your landlord.
Which is amazing, I think, for those renters who feel like they can never get into the market because they can't have the amount of savings that maybe someone who's living at, with parents, or they've got a situation that allows them not to have to pay a regular rent or whatever. they're getting an opportunity to actually get into this market,
Mm.
and they're being given the same right to say, well, you have been saving, but your money's been paying off someone else's house. So
Yeah.
let's use that to boost your own borrowing.
Yeah, why not?
That's
Why not?
amazing. And I hope that for you guys listening, that you're like thinking, wow, I didn't know that. Now I have to go see, I'm paying $600 rent a week. So
Yeah.
might change a lot.
So I would say that, it's not as simple as saying that LMI is bad or good.
Yeah.
It's depends upon the buyer, their number, how long it will take time, to save them that money, and whether you are ready to enter the market, whether you want to take the advantage of the market as well.
Yeah, of course.
So, yeah, it comes down again to different situations, different clients.
Yeah, absolutely. And I think this is the perfect time to talk about our fan favorite segment, which is the Reddit Real Talk.
Yeah.
And what we normally do on this show, if you're new here, is shout out to our listeners who always submit Reddit stories to our inbox. You're welcome to keep doing that. We love it. And then we unpack the stories with our guest of the week. And then we get her or him to answer those questions and help us demystify what's going on. So, Ankita, are you ready to play with me?
Yeah, why not? Let's do it.
Okay. So this one reads, my partner and I are trying to determine our best strategy and pathway to owning our first home. I just started a new job, increasing my annual income by 50K, which is making the dream of owning a home feel a lot closer than it was before. For context, 40K base plus 8% bonus. My partner, 80K base. No kids and no debt. However, we each have a HEX debt of around $35,000. We rent an apartment for $540 a week. And we have 50K in our joint savings account. We are trying to weigh up the pros and cons of buying in the near future with a small deposit, paying LMI on a mortgage to get ourselves into the market as soon as we can, or whether we save until we have at least a 20% deposit. We're considering spending $700,000 to $800,000 on a principal place of residence. All right, Ankita, you're the professional today. Let's treat this like a real buyer scenario. When you hear a scenario like this, what are the first things you'd want to check before giving any guidance?
I think the first thing I'd want to do is to slow the numbers down and understand the full financial picture of the client. So in a scenario like this, I'd usually want to check their employment stability.
Yeah.
How long have they been in this recent job change since the salary increase? Are they on probation right now? How long have they been in this industry? Which lenders would accept the new income immediately? So would want to check that. Their monthly cash flow. So how many subscriptions they have, how much they consistently save, their spending habits, whether repayments would still be comfortable at that income after buying. Would also check their true borrowing capacity.
Yeah.
Their HEX debt.
That's a big one.
Yes. But that's good news because actually some of the lenders are fine with HEX debt.
Oh, okay.
Yeah. So it's not too daunting.
Yeah, and it's not like going to deter the
Yeah.
bank from lending.
That's right. Their living expenses, their bonuses, their existing credit limits.
Yeah.
In terms of their deposit, how secured they are. I want to calculate their deposits, their available genuine savings. Are they prepared for the stamp duty and the ongoing costs or the legal costs or any emergency buffers?
Yeah. 100%. There's so much.
And because if they are new in the market, I would try to see if they can get into the first home buyer schemes.
That's a
Yeah.
big one.
If they can get into, if they can get that advantage out of the government, then why not? Because they are already helping.
Yeah, well, they're in that. If they qualify, it's always a conversation to be had.
Absolutely. If they are buying it for their lifestyle or for their investment purposes.
Yes, that's true.
Yeah. So these are the few things I would like to work upon and have an understanding of what it's going to come out to be.
And then that's how you kind of determine, based on all those factors, well, should they keep saving or should they just cop the LMI and keep going?
Yes,
Yeah.
absolutely.
And I guess, how should buyers think about that trade-off between paying LMI versus continuing to rent while they save? I think this comes back to the rental benefit for that.
Absolutely. So a lot of buyers see LMI as dead money.
Yeah.
Yeah, which is understandable. It's an insurance premium that protects the lender, not the borrower. So why?
Mm.
But rent is also money that is a dead money.
Yeah.
It's not helping you build your equity.
No.
It's just going for somebody else's mortgage. So definitely these are the things we need to consider, that which will be more advantageous for us or beneficial for us going ahead.
Yeah.
Right? How quickly the property prices are moving.
Yeah, how much change happens, especially in this market.
Yeah.
It's changing.
It's changing. It's changing, not for good, but still good.
Yeah.
I still feel it is good for a lot of people out there.
Yeah.
They have a lot of opportunities out there to get into such kind of a market. When the interest rates are high, the property correction happens.
Well, that's the other thing. I always say, if you can get into the market where it feels tougher than previous markets, and, you know, we wish we could have predicted what would happen in COVID, but we didn't, you know. Those rates back then were like at 2%, 2.1, 2.6, and, you know, now we're obviously in a different space. But I always say, well, what if you know and have that crystal ball, please let all of us know so we know how to play the game.
I wish.
I wish. But it always comes back to that same statement that if it's right for your position to buy, do it. Don't wait for this crystal ball mentality.
Because also, you know, over 2 to 3 years, rent can add up to tens of thousands of dollars.
That's what I mean, and it does.
Yeah, and that's where you need to again rejuggle. Where do you sit well?
Correct. Like if this couple, I think they said that they pay like, what is it? I think they said like $600 a week on rent.
Yeah.
In a month. That's like $2,400 just about. You times that by 12.
Absolutely.
You know, that's a lot of money to contribute as a recognition.
And the good thing is they are on a good income.
Yeah, correct.
So if everything else looks good, why not? This is the time for you.
Well, yeah, I think that's always the question and the answer, right? It's like, if it works, go for it.
Yeah.
And like, I guess, what are the hidden risks in this kind of situation, I guess, that, you know, people online might miss? Like HECS, you know, job history, lender policy, spending habits or buffers. Like, where are those hidden risks that they probably should be aware of?
I think that one of the biggest problems is with online advice is you get limited knowledge.
Yeah, that's true.
Yeah, you don't get into the detail side of things. So yes, in terms of HECS, a lot of times you forget about HECS.
Yeah, true.
And you forget to put it out there in your online servicing, right? Because it's not in front of you, it's forgotten.
Yeah.
But the bank hasn't forgotten that. They can see it. They can see it right there.
I can see in your payslip you're contributing to HECS.
Absolutely. Your recent job changes. So if the job has been changed, so say for instance, a client has gone from a permanent to a contractor with a higher salary. So there is salary increase, but are you still acceptable to the bank? Maybe not, maybe yes.
Yeah, it's one of those things like, maybe.
Yeah. So if you have gone from casual to permanent, how long do you need to be in probation for?
Yeah, that's true.
To be accepted readily by the lender. So these all things do impact a lot. Lifestyle inflation. A jump in the salary often leads to increase in the expenses.
Oh, yes, it does.
Yes.
Because you get to play.
Yes, exactly. But you either pay or you save.
Yeah, that's right. I know what I did when I had an increase. And I know what my partner immediately said after that.
So, yeah, your credit cards, your buy now, pay later limits.
Oh, there's a lot of that.
Yes. A lot of people forget about those side of things as well, because not everybody is looking there at their statements when they are assessing it.
Yeah, that's true. And they're not monitoring and reviewing as often as they probably should. And then they get a broker, and then the broker's telling them, hey, what's happening here?
Yeah. And I think one of the major factors is not having that enough cash buffer after
Yeah.
settlement. Because you'll still go and buy your furniture,
That's
your
right.
beautiful rugs, you'll get the curtains in. However, you still need to make sure that you are covered for at least 2 to 3 months later.
Yeah, I think that's super important, and that's where like working with a broker is going to be able to give you those buffers when you're borrowing.
Yeah,
And
absolutely.
And, thank you for answering that scenario. I always, I know it's a bit of a hot seat question, but I appreciate the way you answered it, and very well answered too.
Thank you.
Thank you to our listener for submitting that one this week. I want to move into, I guess, the biggest home loan mistakes buyers make. Now, in your view, because you've seen this for, a long time now, what are some of the biggest mistakes buyers make before applying to a home loan? Like, where are they going wrong?
Yeah, sure. So most of these mistakes are completely avoidable.
Yeah.
Provided they have a knowledge of how lenders look at your application.
Right.
A lot of people do apply with multiple lenders.
Oh, yeah, because that hurts you.
That can kill the deal, because it's going to come on your credit report.
Right.
And the credit score goes straight down, which affects the borrowing majorly.
Yeah.
Right. Changing jobs right before applying. That again
So frustrating.
is a little bit of worry for the lenders. Not closing unused credit cards.
Oh, wow.
Yeah, we have had instances where a lot of people have forgotten about it.
Yep.
And it's come on the credit report.
And you're like, what's happening?
Yeah. And they're like, oh, we thought we closed it. No, it's not. So might need to reconsider. Then I think, again, as we covered it before, a lot of people don't cover HEX into their calculations when they are actually trying to look around for the properties. Getting pre-approval, then waiting too long to buy.
This is the one that I'm on a mission to solve this problem with brokers at the moment.
Yes.
But yeah, that's a big one.
It is, because people forget about it, and then it gets expired, and then
you got to do
reassessment, and their changes come up, and
the market's different.
The market is different. The interest rates are different. The policies can change as well.
Yeah, you're competing so much with so many things. This is. Yeah. We'll talk after the show. I have a solution for this. And buyers, stay tuned. But it's such a good point.
Yeah, but even with the bank statements, like you would be surprised to know that a lot of lenders sometimes don't even want to look at your bank statements, but they can still ask for it.
Yeah.
So I always, suggest my clients that keep your bank statements clean.
Yep.
Don't make them messy. Lenders won't like to look at the unexplained expenses. Yeah.
Yeah. And I think this was a big one with like younger people. Like my cousins are going through purchasing at the moment. They're going through lending. And I said, if you do any stupid transfers to your friends, like when you go out for dinner and you title things like, drug money, stop. Yeah. It's going to kill you when they review it.
And you're right. A lot of times our clients have made huge transfers, 20,000. 30,000 to a friend. Why? Because they need it. And now that money has come back in your account. So where has that come from?
Oh, so it's like all these explanations of money movement.
All these questions. And then you have to prove it to the bank that it was legit money.
Yeah. I had this when I was lending, like my mum, like this is when I was much younger, would put, her and I would be buying shit and would be sending money back and forth. And they treated her like a regular, like, creditor. I said, no, like I'm giving money back.
Yes.
And they're like, no, it's like, what are you guys doing with this money? And I'm like, oh, well, sometimes she pays for coffee and sometimes I pay for coffee. And we're just, I'm buying something on Amazon, and that it's just having fun together.
And you're still talking about little money.
Correct.
Small money.
No, but if we were doing big transfers, I can imagine that's a big problem.
It's always asked for.
Yeah.
And when comes the time that you need money for your first home deposit, questions asked.
Yeah, of
Yeah.
course. And it's like, just try to do good record keeping for 3 months.
Yes,
Have something
absolutely.
clean.
At least 3 months. Yeah.
No, it makes sense. And I
Mm.
guess, what everyday spending habits, like I think we've covered this, but like just in case we've left anything out, like what everyday spending habits or financial decisions can quietly hurt someone's borrowing capacity the most?
I think definitely like the open credit cards with
Yeah.
higher limits, um, regular gambling.
Yeah,
Yeah.
that's a big one.
So I had a client who was turned off by a lender because they saw a few
Like
betting.
sports bet.
Yeah, sports bet it was, yes.
Yeah.
Sports betting transactions on the statements, and no lenders want to see that.
No, because it's
Yeah.
not very, you're not getting much back unless you have a big win. And even then,
Mhm.
it's not considered positively.
Yeah. Personal loans is another thing.
That's a big one.
Yeah, they can hammer really bad. So if you don't need it, please don't have it.
I remember even my journey, I had a car personal loan,
Mm.
but
Yep.
I remember I had all my savings and they said, my broker at the time actually said, use your savings to pay that off. Like there's
Yeah.
only a little bit of money left, just pay it
Yes.
off and then we'll do the application.
Because it makes a huge difference on your borrowing power.
Oh, it did. Yeah, because when they told us our serviceability back then, I think it was like we were looking at maybe 600,000 and then we got approved for $1 million.
Mm.
And that's because I got rid of that debt. And I'm like, oh, crap. They're like, yeah, it's negative.
Yeah.
So it changed a lot for us.
Yeah. And I think the other most important thing is the afterpay. I know it's little amount again. People don't go beyond like 4,000, 5,000. However, it does still affect.
Because it's like a loan.
Yeah. And a lot of people don't know that. Because I know when it started coming into the market, how it was approached.
It wasn't like that.
No, it was like, oh, you can just pay it later. That's fine.
Yeah, and you get the item.
Yeah. But because I was in the industry, I'm like, nothing comes for free. I'm sure there's something
There's a catch.
going behind that. And I've never had it for my end because I'm like old school.
Yeah.
Stay away.
Yeah, it's like,
I
just
don't like
buy it.
loans except one loan.
And that's the mortgage.
Yeah.
And I think that's the other thing. Like even I had to close, like I didn't know I had Afterpay. Like I was 23, 24. Like I had even older, 27. I had my Afterpays and this is right before we went for a home loan. And again, my broker said, can you just close those accounts, pay them out and send me the confirmation because it'll help your borrowing.
Yeah.
So it wasn't a big deal to maneuver because it wasn't like back then I had these, it wasn't $10,000. It wasn't even, I think, $500.
It's always little.
It's little stuff.
Yeah. And people can easily forget about it.
It is very forgettable.
Yeah.
Because it's
That
automatic.
is the most.
And I guess, once someone has, pre-approval, right? Because like this is the exciting part when they've been told that they do have enough funds to go and buy a house. So once they've got that pre-approval or they've signed a contract, what should they start avoiding? Like what should they not do? Because I feel like that's the period where they get their pre-approval, then they're finding a house, but then their habits still continue negatively through that period. So what should they avoid doing in that in-between zone before they buy and getting approved?
Yeah, sure. So a lot of people pre-approval think that if they have got a pre-approval, they have the approval.
Yeah.
But that is not right because obviously pre-approval is just a conditional approval.
Yeah, that's
So
right.
anything can change. For example, in today's market, the interest rates have changed and that interest rate increase has decreased your borrowing power without you knowing.
Yes.
So that is affecting, so that is uncontrollable, right?
That's out of your control.
Yeah, you can't do anything around it.
No.
However, what you can control is your expenses.
That's right.
Yeah. Don't go and make any major expenses.
Yeah, no buying a car.
Yeah, I was coming on that. You got me there. Don't do any car finance.
Yeah.
Yeah. We suggest the clients not to change jobs as well. Or even if they do, maybe a similar type of roles of what you were doing. If you were a full-time employer, please go for full-time employment. Don't pick up any casual roles.
So now I'm casual.
Even though even if they pay money.
No, it's not good.
Higher money, yeah. But in saying that, a lot of people do feel that pre-approval is something which make them secure
Yeah.
to get into the property, but there can be a lot of changes.
Yeah, and that's the risk, the
Yeah.
dangerous part.
Yeah. However, I still suggest that even if you are not ready for the next 6 months, get yourself pre-approved, because you don't know what's coming in your pre-approval.
No, you don't. And if
Yeah.
it changes in that period, you're going to stuff yourself up before you go to apply for that, unconditional
Absolutely.
approval.
Yeah, and I've had instance where a client had been going into auctions, and then he just randomly calls me and tells me, I bought a property. And I'm like, wait, did you have a pre-approval? No, I didn't. Oh my gosh.
It's the scariest moment.
All right, let me look into it. So he was very confident again,
Yeah.
because he always thought his income was
Mhm.
high. He was fine. He had deposit.
He did what he
Everything was
needed.
fine according to him. But where was the catch? It was his credit score.
Oh,
So there was a default on his credit report, which he had no idea about.
yeah,
And that's where everything changed
of
for him,
course.
where he was thinking he could have gone with one of the majors. We had to deviate and ask for 100 other things to get it all sorted.
But you got there in the end with
He
him.
got there at the end with one of the majors still.
Nice. Well done to
Making
you.
his application very strong for them to,
Approve
believe
it.
the client. Yeah.
Oh, good on you. So
Yeah.
these are the stories, like this is what the power of lending,
Yeah.
working with a broker can do. It's
Mhm.
they understand all these tips and tricks
Yeah.
on how to navigate.
Yeah. Have a lot of those stories.
I can imagine.
Trust me.
we
All
need
my
to-
clients are such interesting clients.
We need to bring you back on the show just for the client stories, I think. I can't believe how fast the time is gone. We're coming to the end of our time. I think I want to wrap up, your episode with two things. I think one of the big things here is we'll bring you back on to talk about fixed versus variable.
Sure.
But if you can tell me, I guess, the quick version, what is the difference between fixed and variable?
Mhm.
And, what type of borrower might suit a fixed rate or a variable rate?
Sure. So I usually explain it in very simple terms, certainty versus flexibility.
Yeah.
So fixed term or fixed rate would be certainty.
Yeah.
Variable would be flexibility. A fixed rate basically is when you can set up your rate for a period, and that generally helps for people who want their repayments to stay the same. They want to be protected if the rates go up, and
it's like because they're going to be protected, like they want to have security and certainty, like you said, in fixing that interest rate for a period. So if that's 2 or 3 years or 1 year, you know that you're not affected by the interest rate changes in the market. Is that accurate?
Absolutely. The only thing is you won't be able to benefit if the rates go down.
That's right.
Or you can't make huge lump sum payments on a regular basis because it's fixed.
That's the killer, I think.
Yeah. However, there are different structures which we can still manage around, which I can come back to it on
on the next episode.
Or probably later, yeah. But yeah, variable is basically variable repayment is for people who want flexibility, who can manage that risk of their repayments, who are in the market. Maybe they have plans to sell or buy another one. So these are the factors where people want to keep it variable, where the fixed rates aren't looking too great, and they want to wait for the market to improve in terms of their interest rates and so on.
Yeah, so it's like when it drops, and then you can take benefit. If it goes up, yes, you've got to have that risk appetite of being able to handle that change, which makes a lot of sense. And, I think it's based on their risk, as well. Like, can you handle that?
Yes.
And if you want certainty, or like you want that assurance of, I know my rate and I'm fine for 2 years. But I feel like on the opposite end, you get bill shock when the interest rate drastically changes after 2 years. And I think that's what a lot of people went through out of that transition from COVID to high interest rates for inflation.
Oh, yeah, definitely.
So that would have been a challenge for a lot of people who had fixed.
It was.
So a lot of people that had variable gradually went up and up and up and up and then down and up and down.
Oh, yeah.
It's been crazy.
Until last year, we were still seeing those beautiful home loan statements with 2.8 0.99 or 3.12. I'm like, wow, how beautiful those rates looked then.
Oh, how good. And lending was so different. And
Yeah.
property buying was so different. It was a great time. But I always say things change. It's not it's never going to happen again.
Absolutely.
It's just got to shift with the market.
Absolutely. You stay consistent and, you will still gain out of what you have done for yourself. So why not?
If you work hard, save your money, and you want to get somewhere in property, you will do it.
Yes.
You just got to have the discipline and stay true to your goal.
And don't get scared by the market, because that's what it is. Market is supposed to fluctuate, right? It's supposed to go up and down, and that's where you need to learn from it. A good investor will probably be not so scared about these interest rate changes. They will still be then in the market, and we have been busy.
Yeah, that's it.
Our investors are still calling us.
Well, that's the thing, I've always say, if you can survive these higher interest rates, you're fine.
Yeah.
If you can manage a home, buy it, manage the mortgage and groceries, you will be fine.
Yes.
Because if it gets better and it goes down, you're not going to believe how much flexibility you have. Whereas when you get in with that lower rate, I think a lot of the people that got in with COVID started to stress. And that's why it was so shocking that they hadn't had enough buffers, or maybe their broker didn't work with them on those contingencies.
And you will definitely survive. You will be able to make those repayments because banks have approved you.
Yeah.
Because banks have already, the lenders have already done the stress test on due to that buffer they apply, that 3% buffer they apply. So surely you can manage those repayments. It's just you need to be consistent and you need to do the right thing.
I love it. Ankita, this has been such a beautiful conversation. Thank you so much. But I can't let you get away without coming back to our statement of the day, and we need to determine whether this is bullshit or not bullshit. So I'm going to read it out again. The statement was, a 20% deposit is not always the smartest move. Sometimes waiting can cost you more than LMI. Do you think that's bullshit or not bullshit?
Ooh, exciting time.
What's the verdict?
So it's not bullshit for sure. In many cases, it's actually true. A lot of buyers assume that they must save 20% deposit before buying because they want to avoid the lender's mortgage insurance. How long do you need to wait? You need to ask yourself those questions.
Yeah.
Are you ready for the market? If the property prices rise while you are saving up for that money to buy that 600 is now become 700. Are you still ready again to continue with that challenge?
No.
So definitely we feel that it's better to get into the market as soon as you can by paying that lender's mortgage insurance, because don't forget that your property is still covering up for that mortgage insurance you have paid.
Spot on.
It's still growing in that value, and it's going on a very rapid growth.
Of course.
If you buy it in the right market and the right location.
Yeah. Well answered. I love that we get to determine and hold up our name of the day. Ankita, thank you so much for sharing your wisdom with our audience today. It's been wonderful to chat to you and so fun.
My pleasure. Thanks for having me. It was lovely and I enjoyed talking to you, Jo. You're amazing.
You. I appreciate it. I love a good compliment. So I thank you so much. Very humbly though. It's great to have these conversations. I just love talking to different people because you get different perspectives. So this has been great.
Yeah. Thank you.
Of course. And thank you to our listeners for always tuning in. So for those of you that want to connect with Ankita and just talk about your mortgage options, if you're about to buy or you don't know what you're doing, just pick up the phone and have a conversation. I always say it costs nothing to have a conversation. Start that chat and see what your options are. And her details are on screen and in our show notes below. And if you love this episode, please share it with a friend who's thinking about buying or has been a bit too nervous, or they're putting too much money on sports bet. Stop them. But seriously, thank you to all our listeners and our supporters. We'll catch you next time on the No BS Real Estate Podcast. I'm Jo Agresta. Bye for now. That's a wrap for this episode of the No BS Real Estate Podcast, powered by Abodi AI. If you found this conversation helpful, don't forget to subscribe, leave a review, and share this episode with someone who might need it. If you're looking for more guidance on your home buying journey, you can visit www.abodi.com.au for expert advice, property insights, and the tools you need to find the right home with confidence. If you're already on your journey, you can also download our app. Just search Abodi AI on the App Store or Google Play. Have any questions or want to connect, you can follow us on Instagram at abodi.com.au or send us a message. We'd love to hear from you. Thanks for tuning in, and we'll catch you in the next episode.